Well, good evening, everyone. Welcome back to the channel. So we're back to dividends again today, and I got another fan suggestion, which turned out to be awesome. This one is the CLM, which I knew nothing about until I read a comment today. So when I saw it and I saw what it was paying, I said, "Oh yeah, we're definitely adding this one to the list because this one is actually beating the the SVOL." But we've got to understand why that's happening, and I'll show you exactly why that is. So we will start out with Yahoo Finance, and then since we have a new fund, I haven't done the spreadsheet yet, so we'll do it live today. And I know some of you don't like all the live clunking away, but you'll just have to deal with it today, unfortunately. So we had a lot of red in the market today, and this week it's kind of a crazy week with all the ups and downs of what's happening with the banking situation and the Fed raising order image. The situation was kind of a shock to some, but it is what it is. I think by the end of the year, we're probably going to be cutting rates. So that's good news, at least. So now, if we look at Yahoo Finance here, we're going to be in for a big surprise here when we look at CLM. Now, this fund is called Cornerstone Strategic Value Fund, and I probably know as much as any of you that are just hearing about this because I literally just read it in a comment today. And very good comment for the person that left that. So this fund is currently trading at 753, which seems really cheap, I'm sure. Now, there's a reason for that because this fund has actually fallen in half over the last year. So this is something we got to pay close attention to because with these dividends, you can see the what right in front of you, but you've got to understand the why. Why is the dividend so high? Well, the dividend percentage doubled because the fund fell in half. So if the fund falls 50%, what's going to happen to the dividend? It's going to double. It moves inversely, right? So if the dividend is a dollar and the stock is $10, or just say the dividend's a dollar and the stock is $5, that's a 20%. Actually, go back to my original. Okay, the dividend is a dollar, the stock is $10, so it's paying a 10% dividend. The stock falls in half. Stock falls to $5 a share. That $1 dividend is now 20%. So if you buy in at $5, you're getting a 20% yield. But for people that were in at $10, they're down 50%, even though they're still getting the dollar dividend, they're down 50%. So that's something you have to take into consideration. Now, this still could be at a good buying point because it's been beat up so much. If we go back to, it used to be 1563, like 5 years ago. It was 1409 last March, and then it kind of fell like a roller coaster. It just fell straight down, and it's been kind of dropping ever since. Now, if we look year to date, it started to recover. That first month of the year that we had that was so great, it started to recover. It was 841 in February, but then it's fallen. So it seems like the price for the last 3 months at least has stayed pretty steady. We're literally flat for the year. So this could be a good buy, even though earnings per share is negative. That's a red flag a little bit. Um, but from a dividend standpoint, I mean, 20% is very appealing. Now, this one, look at the financials here. Earnings really fell off the cliff in 2022. We can see here. Let me read a little description about this company because, like I said, I know very little about it. Let me go to the profile here, company profile. Come on. Okay. It's located in Asheville, North Carolina. Now we're sold, right? Now that we know where it is. Just a little joke. Okay. Cornerstone Strategic Value Fund Inc. is a closed-ended equity mutual fund, closed-ended, launched and managed by Cornerstone Advisors. The fund invests in public equity markets across the globe. It seeks to invest in stocks of companies operating across diversified sectors. The fund primarily invests in value and growth stocks of companies. It also invests through other closed-end investment companies and ETFs. Wow, they were founded in 1987. They've been around that long, and I've never heard of them. And guess what? The fact that I've never heard of them makes them completely illegitimate. I'm just kidding. But there are people that will tell you that. They'll say, "Well, wait a minute. I've never heard of this. That it can't be legit. I've never heard of them." And I hear that and I say, "Really? Is that how you think?" No wonder you don't have a lot of money if you think that way. That's really a dumb way of thinking, and that's not aimed at anyone in particular, but hopefully none of my audience does that. And if you do, just don't don't do it anymore. We just got to look forward. So anyway, with that being said, now we'll look at SVOL again because SVOL, I think, is still. I mean, it's tough to beat 20% dividend on $7 a share. That's a great find. That really is a great find. But SVOL is 21.72, and I probably feel a little dumb because I just bought into this, and now I know there's a fund for like a third of the cost that could have been had. But I'm just really not sure what the long term prospects of it are, honestly. And if you need some words of encouragement, for some reason, Yahoo Finance has this ad at the top of the screen that says "Be safe," and I guess it's in like 10 other languages, in case you wanted to know there. So anyway, SVOL, I guess be safe with investing. SVOL is yeah, like 3 times the cost of the other one we just looked at, the CLM. 17.79% dividend yield, which is phenomenal. And I'm still a big fan of SVOL, but I like the other one so much so that I'm going to have to actually go to the site and we'll look at net asset value and we'll look at some of these other nerdy financial things. CLM stock. This one is no, it's a closed-ended mutual fund, but it comes up like a stock. So let me do this. Let me switch screens here. And how are we doing on time? It's almost the end of the day on the East Coast here, but ooh, I got 4 live viewers, so I could go for a while here. By the way, I hope you all enjoyed the podcast we did Wednesday. We had a dating coach on the podcast, which I know that's uh, a bit of a variation from our usual financial coaching, but sometimes those can go hand in hand in some ways. Relationships and finances are important, right? Think prenups, right? Just kidding a little bit, but finances and relationships, it's important to be kind of on the same page. Anyway, really enjoyed the podcast, and what I'm going to try to do is have other guests on because I get a lot of people that reach out to me on other social media pitching business ideas and stuff. And what I want to tell them is I want to say, look, you want a combined 3,000 audience, 3,000 followers in our combined audiences, then you know what? Come on, pitch your idea and let the audience be the jury and let the hosts be the judge. So anyway, with that being said, back to dividends. I know I already lost 1 live viewer. I know if I get off dividends for like 10 seconds, I lose viewers. You guys just love dividends, so I'm going to stick to dividends as much as possible. So anyway, let me stop this screen share, and then I'm going to go to my other screen here because I want to actually pull up the fund site. So that viewer that just left, I'm talking about dividends again, so come back. Hurry up. Okay. And feel free to comment. Anyone that has any comments, we really, or I like to get comments on here. So let's see here. Am I sharing? Oh, come on. I'm sharing Yahoo again. Come on. All right. Let's stop this and then fumble around here a bit more. I know some of you aren't huge fans of the fumbling around, but it is what it is. This is unrehearsed, off the cuff. So, all right. This was just Googling. For some reason, Google auto-populated the word stock. But you know what? I didn't look at the maximum on this. Yeah, that's right. This does go all the way back to 1987. Ooh, this one, if you held this all the way since then, you would have been caught holding the bag. This has really dropped in value over time. That's not too good of a look there. So a bit of a red flag there. And the markets ended up today. I didn't really follow the markets too much. I've been really working hard last day or so. We go to the fund site. Cornerstone Strategic Value. Oh, good. We'll come up with our net asset value here. Net asset value. Ooh, it's overpriced. How about that? It's at a 15.14% premium. Shares outstanding. Let's see. Press releases, investor reports, other info, SEC filings. By the way, I heard an interesting stat. Anytime the SEC convicts someone, or anytime the SEC investigates, they have like a 90% conviction rating, which is very interesting. If you want to call them, you can call the phone number here. Call them, talk to them, have a good chat about the fund. But net asset value, anyway, it's actually overvalued according to the net asset value. So let me stop the screen share here. And then we're going to do some spreadsheet analysis here. We'll do our favorite example of the $1 million. So now what screen do I want to share? I want to share the spreadsheet, which is going to be, where is it? Got to be careful what I share here. Got a lot of tabs open. Okay, what do we have? Spreadsheet's going to take a minute. Okay, there's our favorite SVOL. So really, since Monday or Tuesday, the numbers haven't changed too much. So we're going to leave this alone for now. But we get to add a new addition to the family, which is always exciting. A new addition to the fund family. And because I like this one so much, I'm going to add this like right under here. I'm going to actually create, if this will cooperate with me. Let's see here. Let me just, y'all are going to have to bear with me here. And you know, the one thing I like about the comments, I do get some critical comments, but I don't really get too harsh of comments on here. Like no hate comments or anything. No trolls so far. I guess that's when you know you've really made it, when you get trolls. So, all right, scratch that idea about doing it up there. We'll just do it here under the JEPQ, which is still another one of our favorites. So it'll still be in good company. All right, CLM. What did I use for font here? Let's see. It looks smaller. That's weird. Huh. I'm kind of OCD. I know font's not important, but it is to me. These little kind of non-value add things, you know. But guess what? OCD sometimes is what makes people successful. It's true. Just study successful people. By the way, speaking of success, I'm going to go on another little side rant here. I got an interesting book in the mail. I'll be right back. I'll show it to you all. If I can find where I put it. I got so much junk. I mean, if I moved my camera around here, like, you all wouldn't believe the amount of junk. Here it is. Okay, so speaking of studying successful people, and it's part of what this channel is about, you know, promoting success and whatnot. So I've been coming across a lot of interesting, like, self-improvement and personal growth videos. And I happen to find the book, supposedly, that Bill Gates and other many successful people that have created, like, multi-billion-dollar businesses and other ventures that they've studied, and it's supposedly called the Master Key System. So I found it for like $5 on Amazon. The Master Key System by Charles Hannell. And it's a small book, so it's a quick read. It's in 24 parts. But anyway, since I was talking about studying successful people, I just thought I would throw that out there. Because, I mean, that's, you know, it's always interesting to study what they're doing. And I know not everybody's a fan of Bill Gates, but you have to agree he did make a lot of money on Microsoft, and you have to agree Microsoft is a successful company. Moderna is another story. We'll won't get into that. Okay, so let's see. All right, at 7:53, this is going to be a really good example. So thank you. I think it was Robert in the comments that mentioned this fund. So shout out to you, very astute subscriber of mine. This is going to be a really good example. Okay, so 7.53 is the price. So let's take the dollar sign out of here. 132,802 shares. Yeah, this is going to look really good. So, I mean, it's pretty easy math. If it's a 19.9% dividend, it's going to be $200,000 in payouts, right? So, you know what? I didn't look at the. I didn't actually look at the important part, the dividend disbursement. So we're going to pivot again back to Yahoo. Oh, the 10K portfolio. I'm just now in the comments here, looking back here. 10K portfolio. I'm not sure, Paul, what you mean by that. Was that most successful people had loans to start their business? That's true, or they were in clubs or different societies or whatever. I mean, there's all kinds of things that make people, I guess, find success. 10K portfolio for 20 or 30 years growth. Oh, you mean just starting with 10K? Well, what you can do, just shave a couple of zeros off of the million. So, like, I mean, another good example, like 100,000 and 10,000. Just shave off. Like, you could pick 10 funds. But for me, if I was doing this right now, and this isn't advice, but I would pick, like, in 10,000, I'd pick. Yeah, I could do that too. And there's a lot I could do with these dividend. Like, I could do a 10,000 series. I wonder, I may go in reverse order. I could have gone in increasing order and started at like 10,000, then 100,000, then a million, but maybe I'll just go in reverse order. But yeah, I could do that. Like, what I would say, probably 5 funds, probably 2,000 in the SVOL, maybe 2,000 in the JEPQ. I like the UPRO a lot. Now, the funny thing is, I want to talk about options more, options trade, because a lot of money can be made in options trading. But because I have primarily a dividend audience, I don't talk too much about options on here. But the UPRO fund, if you're starting with a smaller amount of money and you're really looking to jumpstart your financial future, and I'm not talking about like what they do on Wall Street bets, where they take these crazy, crazy YOLO trades, as they call it. But this may seem kind of crazy to a more rationally thinking person. I know that's I've gotten feedback like that on this channel a lot. Let me highlight your comments here so the audience can see. So what the comment I'm going over here is, when are you going to create the 10,000 portfolio? And yeah, I'll do that at some point here. And yeah, we're talking about Bill Gates. Yeah, he probably had a lot of help that we don't know about. It wasn't just reading a book, certainly. Yeah, so $10,000 portfolios for 20 or 30 years growth. And yeah, the comment you just made here, I've actually heard from a lot of people. I've had some people question me, like, what are you doing with this $1 million thing? You think everybody has $1 million? Certainly not. But I like to think, dream big, as they say. And with all the zeros at the end of the one with a million, it makes the, thank you. Yeah. It makes it easier to see the big picture. Like when you see 200,000, see, YouTube is kind of a views game. So when you see 200,000 versus if I just take 10,000 and okay, you made 2,000, that's not a game changer. It's great. I mean, I'll take $2,000 that I didn't have before, but it's not a game changer. So with that being said, let me just do this real quick here. And I'll go back to the Yahoo screen in just a second. So the dividend is 0.199. So I'm actually just going to manually put this in for now. This is what it would be. Look at that. There's the answer. 199,990 approximately, which, I mean, that's incredible on $1 million if the fund doesn't drop further. Because remember, according to the net asset value, it's overvalued. Oh, but you know what? I'm talking in circles here, and I forgot what I was saying about the UPRO. So the important thing, this UPRO fund, and let me go back to Yahoo Finance, and I'll just show that one too. Oh, really? That's interesting. Yeah, I mean, I agree. What I think is a good video and what gets views, a lot of times are two different things. So, like, some of the videos I've put the most effort into didn't get the most views. Like, when I first started as a YouTuber, I went, like, I got lighting and stuff. I was in front of my TV. I was doing PowerPoints and stuff like that before I started using Zoom, then before I started using StreamYard. Now it's actually gotten easier. Like the videos I do now, I pretty much just do them live and just churn them out. There's no editing or anything. The edited videos I have on my channel are actually the worst performing for whatever reason. So I had to, the crew I was using, I had to kind of pull a Trump on them and say, "You're fired," because it just, they weren't cutting it, unfortunately. And it's not just that they weren't cutting it, but the video, like the performance of the videos got worse and worse somehow. Like the first couple videos they did for me got a lot more views, but then the views just started dropping and dropping. And it was to the point that it's like, okay, because you run across a ton of people online, like everybody's an expert online. Everybody's a coach for this or that. Not like me, financial coach, but everybody's a coach for something else. Yeah, that's a great observation. I just pointed that out earlier in the video. If you look back to 1987, when it was trading at like $200 a share, it's down a lot, actually. So that's definitely not a good sign. But this fund does fit our example because of this, what I have on the screen here. But what I'm saying, back to the edited videos, and I'm losing some of you because I'm on another side rant here that doesn't have anything to do with dividends. Yeah, I went over that earlier in the video. And let me just go ahead. I've been saying this for like 5 minutes, but let me go ahead and switch back over to the Yahoo screen here. And I'll show that again. I'll show the chart again. I've got to look at what the dividends are actually, if they're monthly, because it's 19.9%, but I've got to see if they're actually monthly or quarterly or what. Anyway, back to that UPRO thing. Okay, so the way options work, you basically have options give you leverage. So trading a stock is never going to get you to the promised land too fast unless you have a lot of money. But with options, you get leverage. You have like 10 times the leverage because one option contract controls 100 shares of stock. So if you buy like, say, 10 contracts of the UPRO at a June 2023 expiration date, which I've done several times this year, actually. It didn't hold it long enough, but I've got another one. I bought like 20 of them this time, and they're cheap because the S&P has been fluctuating a lot. So the UPRO, first of all, is a fund. Let me just go into that before I go into this here. The UPRO is a fund that is already triple leveraged for the S&P. So when the S&P goes up, when we have a year like we were having a few years ago, where the S&P was doing like 20 or 30% a year, think of what a triple leveraged fund can do. You're talking 60 to 90% returns, but it's optionable on top of that. So what I just told you, that the options give you 10 times the leverage. Now a light bulb is about to go off in all your heads here, because 3 times the leverage and then an option of 10 times the leverage times 3, that's 30 times the leverage, right? So then if the S&P has a year that it's doing 60 to 90%, think about that. I mean, I'm sorry, not 60 to 90%. That would be phenomenal. That would mean the index was doubling, which I don't think has ever happened. But anyway, so yeah, if the S&P is doing 20 to 30% in a year, that means this fund's doing 60 to 90% because it's triple leverage. Now it is risky and it's got a high expense ratio, which I know some of you get concerned about. So when it drops, this fund's going to drop even more. But remember, the maximum you can lose is your whole investment amount, which probably isn't encouraging to everybody. But you can't lose more than that. When you start dealing with leverage trading and whatnot and options trading, sometimes when you're shorting stuff, like you can lose more money to invest. So it's actually, when you know a lot of what there is to know about trading, it can be reassuring to know that the maximum you could lose is your principal investment. That can be a reassuring thing when you deal with some of the trading that I've seen. So with that, okay, so 20 to 30%, I'll get this out in a minute here. 60 to 90% triple leverage, right? Okay, but then if you have 30 times the leverage, you're talking 600 to 900% on one trade. If you have, and then think about, this is like with 10 contracts, right? So if you're doing like 20 or 30, and like I said, they're cheap. If you're doing 20 or 30 of these, now this is like a free trade tip. So this video can be very valuable for those of you that know what I'm talking about here. Yeah, SVOL's dropping too. I'm getting a lot of good comments today. Wow. Which one? Let me put this up here. Which one can take years to recover? The CLM? CLM, probably. Not advisable. What, maybe the trade I'm talking about? I don't know. I'm kind of a risk taker, me personally. I made a good profit on this twice this year. But let's see. And eventually, once all this stuff settles out, the S&P, I think, is going to go within the next 1 to 2 years. And you can do leap options too. So the S&P within the next year or two, keep in mind we're having an election in the U.S. Do you think they want the market to be down in an election year? I think not. So the S&P is gonna, I believe, it's gonna be up one of these next 2 years. And there's that crazy statistic too that the market's never down 3 consecutive years. It's very rare. It's only happened like 3 times in history, or twice, 2 or 3 times. But statistically, it's very rare. So when you start thinking about odds and probabilities and all of that, the odds may be more in your favor when it comes to something like this. But just letting you all know a little secret on something that I would do. Um, and it is risky. I don't deny that. But June, I think June was the one because this is still 3 months out. I'd probably even go. The thing with leaps, see, you can go. I think you can go all the way to 2025. So if you want to factor in all of that, like the election coming up and stuff like that, you could go all the way out this far, which would probably be a good thing to do. And see, they're cheap right now. Like if you get it at $45, the U Pro at $45, that's 650. So that's actually 650 that you would pay per contract, which for options, that's not bad. But anyway, back to the topic of the video, back to CLM, not Colgate, but Cornerstone. This one going all the way back to, this goes all the way back to 1987. See, 19.99% dividend. Okay, so you're about to see the chart here. Maximum, where are we? Yeah, see, it has lost like 95% of its value. Well, that's strange because this is showing 02, but it actually goes back to 1987. Sometimes the data, because I was on the actual fund's website earlier. Oh, look at this. We have an ex-dividend date of April 13th coming up. So I'm going to look at historical data. And I have to think of the two of these at this point. SVOL probably is the more stable one, just because it hasn't lost 95% of its value in its life, but it hasn't been around since 1987 either. So, okay, this is monthly. Oh, and they just cut it. That's not a good sign either. This is the first one in the series that they've actually cut since. So it only started paying a dividend last April. So, okay, there's a lot of red flags with this one. So last April, it started paying an 18-cent dividend. It only kept that up until the end of 2022, and then it cut it to 12 cents. But so far, it's sustaining, and I think they just announced it again in April. So this dividend was higher. This dividend was almost as high as some of the other ones we've covered, 217, but it wasn't sustainable because 217 divided by 753, whew, that would be 29%. We're almost in Zim territory, that Zim fund, which is crazy with the dividend. But yeah, I think this one, yeah, exactly. That's so funny. Great minds think alike. I didn't even read the comments, but I had two that just mentioned Zim. Of course, oh yeah, I like this one. I don't want to get too political, but yeah, that's exactly where I was going with the market, like next year. There, let's just say I seriously doubt I'll let the market be down in an election year. But it wasn't down in the last one either. So yeah, the U Pro, that one, like I say, it's a risky one, but something I do. I have a little fun with it. It's like going to the casino. So Zim, yeah, I'll look at Zim. I think I'm gonna do an April Fool's video on Zim because it's got that crazy dividend, $6.40. That's pretty good. Tesla covered calls. Yeah, well, see, stocks like that, because they're so volatile. Like I was doing covered calls on Mercado Libre last year, which is like the Latin American Amazon. And those were my most risky, most stressful trades I ever took because I was freaking out about getting called out of those shares. And I took some risky trades that I couldn't believe my broker let me do. And I would have, if that stock got too high, what happens with a covered call? And I'm glad to see some of you know about options on here. I would talk about options more, but like I said, mainly dividend audience. But covered calls, what happens is that you're basically, you can either have a leap option, you can buy a leap option, call option, and then sell calls against it. which is what they call a poor man's covered call, or you can have 100 shares of the stock and sell a call against it, which is this traditional covered call. What happens if the stock runs up? You want the stock to drop if you're doing a covered call. You want it to drop. You want that option to expire worthless. That way you keep the premium. If the stock goes up, well, you keep the premium regardless, but you can get called out of the stock. But if your broker lets you do the leap option in place of the stock and you don't have the money in the account to cover the stock, like your whole account could be liquidated. You could be in a really, really tough position that you don't want to be in. So with that being said, that's the prognosis there for Cornerstone. It doesn't look too good, but I would say, the dividend at the moment, it was appealing. It does fit the example. Let me go back to the spreadsheet. And yeah, I wouldn't mind considering like a poor man's covered call on Tesla, but I don't own actually any Tesla at the moment, and certainly not 100 shares of it. So that would have to be, do a leap on Tesla. I think I was about to try that. It would have been a good move 6 months ago. I think I was actually about to try that like 6 months ago, but something stopped me because I do believe I have a call option on Tesla, which is almost worthless at this point because I bought it in August. And I don't know, for some reason I thought things were going to recover then, but my timing was just off. So, okay, what did we say? It's 12.3 cents now times 12. So that's $1.47 divided by, what did we say? It was 753. There's our approximately 19%. It was 19.9, I think. Let me see. Yeah, 753. But Apple iPhone says 19.99%. So I'm staying with that. So, and then these what ifs, I don't see the dividend increasing, so I'll leave the what if scenarios out for now. But like I said, those are the number of shares you could have, 132,000. Solid payout in this example, in this case. Let's see here. Ooh, another good options comment. Oh yeah, TSLY. That's like the inverse Tesla ETF, right? Now this is a good comment. Best to hold over 80 delta on the long leg of a PMC, poor man's covered call. So yeah, sounds like you definitely know your options a bit, or more than a bit. Yeah. So the way I look at it, like if I'm buying a call, the delta, basically, I don't always follow the conventional wisdom on options. I'm a little bit unconventional myself. I like doing call options. I like taking risks, and I've lost money doing it. But you know what? It's like going to the casino. So the higher the delta, that's basically, the delta is basically like what the stock is trading at. When the stock goes up, whatever the delta is, that's how much it's going to move up in comparison to the stock. So I do like a high delta and a low theta. I know it's like having your cake and eating it too, but theta is no fun. But theta can play in your favor. That's basically an option decays in value every day, and as you get closer to expiration, it's like a roller coaster, or it's like CLM stock. It does this, just like CLM stock since 1987, but it only happened in 30 days in that case. But yeah, so TSLY. You know what? While we're on it, while we're talking options and stuff, I'll pull that one up. So, and if I knew I was going to get a consistent audience, I would do these other topics. I would do these option videos and stuff. So, all right, back to good old Yahoo Finance, and I'll look up TSLY. And I know Yahoo's not the best, but it's just easy. I mean, it's an easy platform to just do a screen share on. But TSLY is, I believe, isn't that the inverse Tesla? I think so. Like if Tesla is dropping, this one makes money. Well, we'll find out. The proof will be in the chart. Net asset value looks like it's pretty much fairly valued. Oh, interesting. So since December, it's dropped. Let me look here on the iPhone. Yield Max Tesla Option Income Strategy ETF. So this is the one that it actually doesn't sell covered calls. against the Tesla? La Tesla? How's Tesla even been doing? You know, I quit following Tesla. Um, let's see here. Did it split again since I mean, I know it split in 2020. We were at 360 last March. We dropped all the way down. Oh, that's why it was higher in December, because we dropped all the way down. Hang on here. Let me look at 6 months. December. Yeah, you see here on the chart, it's pretty much inverse to what Tesla did. So, well, wait a minute. Or is it? Is that true? Let me see. December, we dropped all the way down. Oh, dang, Tesla was $108 a share, January 3rd. What were all of us doing on January 3rd? Not buying Tesla, apparently. At least not me, but I should have been because it's up $90 since then. Synthetic covered calls, very interesting. Yeah, so that one could be an interesting buy. Sounds like a few of you really know your options on here. I'm impressed. So let's see. Yeah, TXLY. I'm just going to explain to the audience what a synthetic covered call is. Similar to a traditional covered call setup, but you purchase an additional long call option above the short call to create a short call spread. See, some of these spread trades, I don't do a lot of those. I know that's how you can make your more short-term income and whatnot. What I would love to do is be a short, like just be a full-time options trader. But for me, I'm still actually stuck in the corporate world. And I'm just, I guess, pulled in a lot of directions. I do this channel, I'm writing a book, I'm in the corporate world. I did finish my master's degrees last year, so I should have more free time, but I can't tell you where it's going. But I want to be just a full-time trader. But the thing about being a full-time trader, you end up just sitting at home on your computer screen trading, and then you end up wanting to sell the course and stuff like that, which who knows, that could come one day. But anyway, I'm trying to wrap my own head around this here. So the traditional covered call we explained already, but you buy an additional long call option above the short call to create a short call spread. So I guess in this sense, you're hedging your covered call trade. Is that right? I'm thinking that's how this works. You're doing the other leg to hedge the trade, is what I'm thinking. That way you don't have that Mercado Libre situation that I just mentioned. But yeah, interesting stuff. Good discussion. Wow, we went for almost 40 minutes here. I think with that, if the audience doesn't have any further questions, I'll end it there. Great discussion. Glad we, had some live audience engagement here. That always makes the videos good. So if y'all enjoyed that, please remember to like, comment, and subscribe. Even if you didn't, please remember to like, comment, and subscribe also, because there's something on this channel for everyone. Thanks again, and hopefully I'll have a video out in the next dividend on what? What dividend? I caught this just before I was about to end it. What dividend? You've got like 30 seconds to tell me. Oh, the dividend on what? TSLY? I didn't see a dividend. I'll look again, but TSLY. Do I do options on AT&T? Oh God, AT&T. Don't get me going on that. All right, well, we're going longer now. So AT&T, oh man, I was excited about AT&T like 5 or 6 years ago when they were making these acquisitions and stuff, but man, what a garbage stock that has been. Absolute garbage. I'm way down in it, but it is a good one to do covered calls in because it doesn't seem to fluctuate that much. Let's look at AT&T real quick here. TSLY, I can't see the dividend, but I'll look on another source here because Yahoo's not always the best, and I don't know if it pays a dividend yet because it just started. Let me look here before I go off on a tangent about AT&T. Oh, and how about that? TSLY is optionable too. A lot of all ETFs are optionable. So okay, real quick, and then I'm going to get to AT&T. I'm looking at AT&T here on the phone. It's 1861, so it's dropped quite a bit. Actually, no, it's been pretty flat. You know what? Dang, 1490 in October was the low point. Oh, there's dividends right there. So what the heck? See, this is my thing with Yahoo. I know I keep using it, but this one's paying monthly dividends that are actually really good. So I'm glad you were insistent on that there, Mr. Varden. So let's see here. We'll add these up. 99 cents, 90 cents, and then another 90 cents. That's 280. We'll annualize this real quick. How do we do that? That's what's the average per month is 93.5 cents times 12. Oh man, this is solid. That's a 69% dividend payout annualized. That's really good. I'm glad I looked. I'm glad I looked because I didn't see it at first. That one, you know what? Now this one's going to have to be in addition to the series here. That's awesome. 70% dividend. I wonder how sustainable that's going to be, though. Is this covered call premium or what? Okay, so back to the yeah, AT&T. Can you retire on that if you have enough money? What's that? How about 690,000 on $1 million, and then just reinvest that? And even if the fund completely tanks, you have your money back in like 2 years. So all you've got to do is wait for the next election and stuff. The market will come up again. Just hold out for 2 years, and they'll prop the market up. In time for the election, they'll definitely prop it up. We'll be cutting rates again by the end of this year. They'll have everything looking good by 2024. So yeah, definitely. And really, retirement PFL. What PFL? I'm about to go into AT&T. You got me on that one, so I'm gonna go into AT&T. Yeah, AT&T. That one, before I learned all these covered call ETFs and stuff, before I knew what I know now. Like I say, if you only knew then what you know now, AT&T used to be one of my favorite dividend stocks because it was paying like 8, which at the time, 5 years ago, I was a big fan of Blackstone, AT&T, and Verizon. Those were like my dividend portfolio before I even knew about all these ETFs. Of course, getting into YouTube, getting more into finance community, networking, talking to all of you has taught me way more. So I know way more now than I did back then, of course. So yeah, AT&T was like a $45 stock in 2016, and it was starting to recover. Like in 2019, it was really kind of starting to recover. Why is it showing? What is this? That's that's strange. This chart's not showing. Well, they split off. Actually, I think they did that split with Time Warner, didn't they? AT&T, Time Warner. Yeah. So this isn't showing quite because I know for a fact in 2016 AT&T was like $45 a share. So I was waiting for it to get back to that. Yeah, they're losing money. They don't have their act together. AT&T, Disney, a lot of these companies. Some people they talk about how they've gotten into the woke stuff, and you know what they say about that. So yeah, a lot of these companies are struggling. But for me, I thought honestly, like HBO Max, I thought is one of the best apps ever created. They have everything on there, but I don't know what's going on. Like I've gotten to where, I mean, me personally, I'm not watching many shows and stuff on TV. The last 3 months, especially, I feel like I've been out doing more. And you know what? Really, watching shows on TV and stuff, I hate to say it, but it's just not a very productive thing to do. Especially, like, I look at myself now as a content creator, not so much a content consumer. So I'd rather create content than consume content because creating content makes money as opposed to consuming content, which is like kind of a waste of time. So my advice to all of you all, before watching all these shows and stuff on TV, I mean, there's a lot of good shows, don't get me wrong, but oh, that's scary. Yeah, I was nose down in my work this week, so I'm trying to follow. I follow business news more so than the other crap. But I didn't follow it as much this week. I was following the market at a high level, but yeah, like I really nose down in my own work. But 190 bank failures, or well, not bank failures yet, but saying they're in trouble. That's where they could go. That's pretty scary. And then okay, so PFL is a PIMCO closed-end fund. Some of these I'll look into on other videos. Oh, you must think just like me, Mark, because I say the same thing. Remember, it's Bank of America after all. Do you think a bank with a name like Bank of America would go bankrupt? It's American as the Federal Reserve, or excuse me, it says American as the Federal Reserve is federal. Think about that. The Federal Reserve. We are really good at naming stuff, I will say, because those of you that really understand monetary policy, fiscal policy, and all that, Federal Reserve is a complete misnomer. There's no Federal Reserve. We're like in the United States here, we're like $30 trillion in debt. But no, Bank of America, it's like Goldman Sachs. Like they're not going to let anything happen to them. Like 2008, I mean, the Treasury Secretary, Goldman Sachs is like the minor leagues for the Treasury Department. And I don't even know why, like being the CEO of Goldman Sachs is much better than being Treasury Secretary because that's just a cabinet position. But most of our Treasury Secretaries come from Goldman Sachs, or a lot of them do if you look at it. They come from Wall Street, basically. Um, let's see here. And I think at one point, Jamie Dimon was on the short list to be Treasury Secretary. But it's always someone from like that Wall Street, Goldman Sachs area. And interesting factoid, Goldman Sachs, or who was it? Hank Paulson back in 2008 was the Treasury Secretary at the time. Lehman Brothers, who they let collapse, they never even tried to bail out, happened to be a rival firm to Goldman Sachs. So just pointing out the facts, not implying anything. You all make your own conclusions there. So yeah, Bank of America, yeah, I don't see them going anywhere. Most big banks are paying 5%, what, CDs or money markets? You know what I think about CDs? I mean, I would do, if I had like that $1 million portfolio, I may put like, I don't know, no more than 20,000 in CDs. Because it just, inflation is still outpacing what they're paying. That's the thing. Oh, I don't doubt this. AT&T, like if you work for the company, I mean, AT&T historically was a great stock. I don't doubt that people retire on it, but I mean, if you buy now, like if you just kind of erase the last 5 years, which unfortunately I can't do because I'm in the stock, and I'm just writing it out. I think I sold some of it at a loss, but it's what is a 6% dividend right now? It's 1861 times 0.612. So that's $1. You'd have to have a lot of it. Honestly, I'd rather do these covered call ETFs more so. Dividends on stocks. The best one I've seen is Icon Enterprises, which I covered in one of my other ones. That's another couple of my key fans like this one. So I actually covered it. This, as far as a stock, unless it's like a junk bond caliber stock, this one is actually, if you're going to buy a stock for the dividend, I think this is one of the best ones. But it has that whole tax ramification issue with the Form K, whatever. There's some kind of basically it's like ordinary income, so you're going to be taxed for those of you really high income earners out there that are worried about that kind of stuff. You're taxed at your marginal income tax bracket, which if you're in the top tax bracket, that can be an issue. Otherwise, you know what? I don't mind the stock so much because, yeah, K1, that's exactly what it is. Thank you. Yeah. But as far as tax, like I say, and I wouldn't worry, like if I were you, because you're asking me about a $10,000 portfolio, so I wouldn't be too concerned about taxes with that. I mean, this is like if you're in the top tax bracket. I mean, I agree. Like I'm probably the least fan of taxes. Like I try to, get as many deductions as I can, because I think honestly, like taxes, at least in my country, are like a big waste. Uh, I don't see what I get for it. There's, I mean, most people, if you start to get to like a decent salary and stuff, like you're going to be in a 15 or 20% tax bracket, and that's a big chunk out of a paycheck. And a lot of states in the United States have state income tax on top of it, and there's city tax. I mean, if you start adding it up there, like there's tax for everything. You start owning land, you start owning property. There's property tax, there's sales tax. So, like I like to say, it's like a sponge. So you have money coming out of your check. What's left from the check is whatever, and then you got to pay tax on where you live. You've got to pay sales tax. So the money you have after tax, you're paying tax on whatever you spend with that money. So yeah, I would agree. I hate taxes as much as the next guy, but when it comes to dividends and stuff like that, it's not a huge deal. And I 100% agree on the tax efficient retirement. What I do, and I think if I remember correctly, you were in Canada, but like in the United States, they do incentivize, and this is another thing with our tax code because they want to tax like consumption and stuff like that, which to me, consumption and spend money is what's good for the economy. That's the lifeblood of the economy. And middle class and poor people have to spend money. They have to spend all of their money. They don't have savings, but if you're richer, it's easier to kind of play the tax code because you can defer your money. And I do this too. Like you can actually max out your 401k, max out like your Roth IRA. Well, your Roth IRA is taxed up front on the front end. So you never pay tax on any. That's one of the greatest accounts ever created. But the traditional 401k or IRA is, and I do this too, you max that out, which is like 22,500 this year. So you max that out. It's a huge chunk of your salary if you're in a corporate job, but you're in a lower tax bracket because that money goes in tax deferred. So you pay the tax later. Pay yourself first, like in business or, well, what I like to do, I don't think I've ever gotten into this on here, but I would rather owe money in tax than get that refund because I look at it as if they're using my money interest free. So, and you know what? I kind of want the money in my hand to begin with because it's like, you know what? The paycheck comes in and wow, it's like there's 15 or 20% of it that I never see. The statement tells me I made it, but I never touched it. I don't believe it. It's like I never had it in my hand. I want it in my hand at least. So with taxes, and I hate how like most financial professionals will tell you, "Oh, consult your tax advisor." That's so stupid, because taxes are finance, and I know a lot of people have to, cover their bases and whatnot. Um, oh, that's good. I'd like to see that the audience is on the same page here. So savings, yeah. Um, Yeah, well, that makes sense. I mean, yeah, you're paying yourself, but it's not like up front. You're deferring it, like 401k. You can actually use a health savings account and do like, and I've done videos on that too. Um, how the health savings accounts you can do up to like almost 4,000 or like 7,000 for married couples, and that's you can invest that. And if you just save that all the way until you retire and or until you're like age 65 or whatever. It doesn't have to be used for health expenses. It can just be another retirement account. Now, if you take it out before and you use it on health expenses, then you get busted. Let's see what we got here. This is fun. I mean, hey, if I keep getting comments, I'll keep rolling. So, okay, generally, I think the idea behind a consumption tax in the U.S. would be a reciprocal for ending the federal income tax system. Yeah, it sounds interesting, but like I've heard proposals about like a flat tax and stuff like that too, which I wouldn't mind, like a flat tax, but I don't know, like a flat tax, like the marginal tax system. I mean, I don't know if it's a necessary evil. I mean, it's debatable, but yeah, consumption tax, that would be interesting. I mean, how do you think that would work? Like, I mean, it's taxed on everything that we buy, right? So, I mean, I'm definitely not a fan of like the IRS is too bureaucratic. The system is way too complicated, way too cumbersome. Even people at the IRS don't know the rules. They'll literally tell you something wrong, and then you'll get some letter or something, and that's no fun. It's no fun getting a letter from the IRS. And yeah, it's yeah, the tax system definitely. It would be nice to see some kind of overhaul. But yeah, so back to Icon Enterprise. Yeah, I like the huge dividend too. So like I say, the tax ramification isn't at least on this one. It's not too huge of a deal. Another thing I find funny about taxes. So we're getting 1099s for like $100, which I thought for some reason, maybe somebody that's very astute in the audience can explain this to me. I thought the threshold was $600. So I'm like, why am I getting these 1099s for $100? You know, let me see here. You wish you could own what IEP? Oh, just get a share or two. Like use your dividends from SVOL and buy some, or reinvest it in SVOL. I mean, it's slightly higher. It's 15% versus 17%. So yeah, and I have the SVOL too. And like I say, I don't mind if these funds stay flat as long as they're paying the dividend out. So 2172, I think it stayed pretty much flat since I bought bought into it earlier this week. Let me see here. I was going to say something else here since I talk about I share that book, but I like to talk about success and entrepreneurship and stuff on this channel too. So let's see here. Oh, Alibaba, the Chinese company. I don't know if anyone's bought anything off Alibaba, but funny story today. I was actually ordering a sports jersey for my local hockey team, and well, I guess I could just go ahead and show it, and then I'll get to these other comments here. But this is good because I might have just gotten my foot in the door on the whole drop shipping thing. I don't know if I would call it drop shipping, but here's the funny thing. I'll show this here in a second. So if anyone orders from Alibaba, it's hit or miss. The order can be completely wrong. So I was ordering an NHL hockey jersey for my local team, and luckily, I get in the mail exactly what I ordered. Not because this is not a hockey jersey. This is actually a NFL football jersey. This is a famous player for the Miami Dolphins. But the funny thing is, and this is really cool. Like sometimes, when you're good with money, when you're thinking about, yeah, I agree. I'll get to that comment in a second. But when you're thinking about money, thinking about being good with money and stuff like that. So the funny thing about this is actually a nice NFL jersey that I got for it was like $18 on Alibaba, or like 15, and the shipping was 18. But guess what? I could sell this for like over $100 because this is like a real NFL jersey. And then I actually just went to Walmart and I found it was like a youth like 3X, and it actually fits me because it's basically the size of an adult large. So I got the hockey jersey I was looking for. My local team is the Lightning, just to give that away. But yeah, it's funny. I looked at Fanatic, and you can't return it if you cut the tags off and stuff, and you wear it, like you try it on and stuff. Like you can't return it. Reebok, like buying directly from Reebok. That's interesting. I'll show what I got here. This is really nice. This is got it at Walmart for like 30 bucks. So I'm happy with it. And Alibaba said they'll send me, because I complained, that they'll actually send me the same one, which supposedly they have. They could have just sent me the right one the first time, but whatever, you know. So with that being said, that could be another good side hustle, because and I think some of these drop shippers, that's what they do. They order stuff cheap on Alibaba and flip it on Amazon. Not saying I would do that, but it's definitely an interesting idea. So with that side rant there, let's see here. One of the longer standing proposals is the fair tax, a 23% consumption tax. Ooh, that seems kind of steep. But elimination of federal income tax and a monthly tax rebate per household determined by number of members and income. See, I just think, I'm not like to the left on tax policy or anything like that. I wouldn't consider myself like a progressive on tax policy. I know we have a progressive quote unquote tax system, but I just feel like 23% steep, especially for the income groups that have to spend all their money, basically. Like, no savings. They have to spend everything on groceries, gas, necessities. I feel like that's steep. Could be wrong, but I've got to look into the merits of that more so. But I definitely do think the tax system does need some overhaul. And yeah, interesting. That's cool. Good to know. I'll have to look into that. I think Adidas is the sponsor of the NHL. Or it might be changing, I actually read. But yeah, I'll have to look into that too. So, wow, we've gone for an hour now. Any other comments or questions or concerns or feedback? I can take one or two more and then probably end it, and then try to be back either tomorrow or Sunday with another video. So with that, well, that was fun. Really good discussion. If you all enjoyed that, please remember to like, comment, and subscribe. Oh, another one. Okay. That's the reason for the pre-bake to offset. Okay. So what kind of I wonder what kind of a pre-bake they would get. Work like a stimulus check. We're having deflation. Well, it depends if you listen to like what the White House says. Inflation doesn't even exist in their world, but they're like in some alternate version of reality. So I don't know what world they're living in, but well, first they said, what did they say? Inflation was transitory, and then they said one of the dumbest things I've ever heard. They said that, oh yeah, there's inflation, but people have the money to spend. Oh, so that all makes it okay. Ask Tom Brady. It's funny. I bought a Tom Brady jersey because obviously he played for the Bucks. He won a Super Bowl with the Bucks. He was here for 3 seasons. I got it on Fanatics and I paid retail price for it. And sure enough, turned out to be his last year. Now the jerseys are on clearance. They have them like at Walmart. And I usually don't make moves like this, but I paid retail for something, and let's just say they're on sale at Walmart for like 33 bucks on clearance now. So yeah, I felt dumb on that one. But anyway, who knows? Who knows if he's really fully retired or not? I say this: his retirement will be official. What he'll do, he'll go to the Patriots and he'll sign like a 1-day contract so he can retire as a Patriot, and that's when you'll know that his retirement is official. But he got burned by that FTX scam too. He got him and his former wife Giselle. They got burned by that big time. So some prices have come down at the store. Well, it's another. I'm glad you mentioned that, because here's a good. This is what the politicians love to say. So if something is $5 and then it goes up to $10, it doubled in price. But then it comes down to $8. You won't hear a word about the doubling in price, but you'll hear, under my watch, prices dropped 20%. But what they ignore, and they do the same thing with jobs too, they say that it dropped 20%, but we're actually still up 30% in the long run. But you won't hear a word about that. You only hear that they lowered inflation, like they're the best inflation lowering guru that there's ever been. So, and then as far as gas, well, yeah, gas is down, but it's still higher than it was like 2 years ago. And it's still that's another thing too, because like if you look at crude oil, so I study a little bit about futures, but crude oil, it confounds me because it dropped to like $68 a barrel, but the gas keeps going up, and they just raise it like in my area. I'm not complaining. I mean, I'm in a lower cost area than most, but it's like 325 from like $3, and it was just below $3 like 3 or 4 weeks ago. It's like, what the heck? Is it because of spring break or what? And with crude oil dropping, so it makes sense when crude oil goes up, gas goes up. It's tied to crude oil. But when crude oil comes down, the price at the pump should come down too. But that's much slower to come down. Now, my whole theory on inflation, nobody talks about this. None of the talking heads in the media, nobody says this. But here's what changed in the last few years. So we are not in the United States as keen on drilling domestically for oil, and we were a few years ago. So energy, our energy policy, I think, is driving a lot of our inflationary problems. So I think the Fed trying to fix inflation with raising interest rates and all that, they're actually causing more inflation. They're causing inflation with loans, with debt. They're causing more interest to be paid. They're actually hurting the problem. 350 a gallon. Yeah, what is it in Canada? Well, they add a lot of different fees and stuff to it. But I was just in, actually, even in California, it's come down. It was like four something, which I was surprised because last year it was like $7 in some parts of California. I mean, I just couldn't believe. I saw like 6.95. There was that joke. It's the 7-Eleven, but it's got like $7.11. So it's like, well, now the name 7-Eleven and the price of the gas, they're equal. But yeah, so 122 a liter. How much is that? Is that I know it works differently. I think you're on the metric system there. Um, but yeah, like energy has a lot to do with this whole situation, like I say, and I would imagine I don't know if it's going to happen because we've got a lot of how could I say we've got a lot of like energy activists out there that don't like oil and stuff, but they'd rather report it or they'd rather import it from other countries, which is funny because I'm going to go on a rant here. But if you're trying to do a climate agreement or energy agreement or whatever, if you start handicapping yourself in your own country, other countries are going to produce more of the same thing. Other developing countries like China, like India, with much bigger populations. So if you subscribe to the whole thing, with clean energy and the environment and all that, these other countries doing this on a much larger scale with much larger populations would actually make the problem way worse if you subscribe to that theory. So it's kind of like, why, it's like we're just shooting ourselves in the foot by not, I just lost like four of you. I wasn't being that controversial, but you got to understand what I'm saying. India and China have like 5 times the population that the United States has. And that's another thing too, when it comes to workforce. If you think about it, like the top 10 or 20% of your population, the populations of India and China dwarf the whole population of the United States and Canada for that matter. The top 10%, the top 20% of 1.3 billion, that number is larger than the whole US population combined. So the amount of cream of the crop talented people in those countries. You think about the supply of a large population like that. Oil companies seem to have free reign to price gouge. Yeah, I don't know. I think there are companies that are taking advantage of the whole. It's like, oh, let's raise our prices too. We produce, we produce goods that we haven't seen an increase in price, but hey, everybody else is raising their price, so let's do it too. Um, but I mean, they they do follow the crude oil. Oh wow, three of you came back. I guess my live viewer count's fluctuating, but this is really good. I like this. This is great for the watch time. Like getting 8 of you on here, or at some point I had 10 of you. This is great. I could actually turn this into like a weekly thing if I get, because I'm noticing different days of the week I get more audience. So I mean, I can keep it going. Tomorrow's not a work day, so this is fun. Um, yeah, I was waiting for a comment like that. The thing with electric cars. So what I saw, I've driven a Tesla. A few friends of mine have Teslas, and one friend of mine let me drive his Tesla, and they're nice. But would I have one? No, because right now, at least the energy costs where I am, luckily, living in Florida, our energy hasn't gone up as much as it has in the rest of the country. So I did the math, and it would cost me more money than what I spend in gas right now because, like, I work from home and stuff. So I don't drive a whole lot. So it would cost more to charge the car. Plus, we're still dealing with the after effects of this whole, supply chain shortage and whatnot. So the the Teslas were going up in price, which is funny because I'm seeing a comment here saying a bit of the opposite. Uh, Maybe they are falling in price now. I haven't really looked, but I know they were like it was like 40,000, which my budget for a car. I'm kind of cheap. I mean, I don't mind driving like a Honda Accord or Honda Civic or whatever. Um, oh, that's fine. Hey, thanks for all the good comments. Yeah, I'm glad you stayed on. Um, but yeah, must be another time zone. But yeah. So you know what? Let's look at Tesla real quick here. Tesla, the price of Tesla. And I actually, I put the video up driving the Tesla. So it's smooth, rides well, accelerates well. I mean, all of that is good, but I wouldn't own one. I'll just stick to my Honda Accord. And that's another thing too. Like, I'm never going to be, a flashy person. Like, I'm never going to have like a Lambo or anything like that, or even an Audi. I mean, I used to like Audi a lot, but those expensive cars come with a lot of expensive repairs and whatnot. And if I have the money, I'm not going to flaunt it. Nothing's really going to change unless I have like millions of dollars. But I'm not going to have like a new money mentality and flaunt it. I mean, I'll have a nice car. Yeah, that's the thing with Tesla. Um, the battery. Now, one of my friends said, "Oh, you know what? It's like you don't have to spend all this money on this and that and repairs. So a battery may be like 10,000, and it's like getting a new car for 10,000." That was my friend's theory. But yeah, I agree. Once it dies, and what I saw here in Florida, we had a major hurricane back in September, and a lot of Teslas in like the Fort Myers area got caught in the storm surge of the hurricane, and it wasn't fun because a lot of them were actually blowing up. They caught on fire and stuff, and yeah, that was something completely unforeseen, and I don't want to be dealing with that. Now, what's this? Rebates what for Tesla? I haven't even looked, honestly. I haven't even looked, but I was gonna search real quick here. I think I was looking if I was to have a Tesla, I think I would have the Tesla Model 3. And from what I can see, it looks like you're right. I mean, I'm looking at a 2020 Tesla Model 3 from Car Gurus with 19,000 miles for 33,000, but I see a 2021 for 45,000, which is about what I saw before. They were about 40,000 or so, which is too much for me, honestly. Like I say, I'd stick with the Accord for like 25,000. That's kind of like my price range for a car. And honestly, Hondas typically run forever. Cars like that, um, even Toyotas, like they run forever. So I don't need a new car for a while. I'll be good at least for another 5 years or so. Knock on wood. Um, let's look at, by the way, just a new Accord. there's a book called The Millionaire Next Door about how basically you'd never know. Like you could have like a multimillionaire neighbor. Um, Volvo S60. I'm loving this discussion. We're kind of all over the place. We got into we're talking finances, then we're into hockey jerseys, Alibaba. Now we're into cars. But hey, whatever. I mean, this is fun. A 2023 Accord MSRP is 32,000, which is crazy because used to be like 26,000. We're still kind of dealing with that used car shortage. Volvo, what was the car? They stopped making a car. It was a casualty of the '08 fallout. I think it was Saab. Was it like a Dutch or something like that? But those used to be good cars, I thought. Oh, that's nice. Yeah, Volvo S60, 48,000 MSRP for 2023. Yeah, that's a nice car. But yeah, that's cool. I mean, you know what? If I was like retired and I had more time and wanted to show off my car and stuff like that, I'd probably get something nicer. But like for now, I mean, I'm good with what I have. But yeah, any other car comments or any other? Oh, Carvana. That was a cool stock too. There's actually a Carvana. It looks like a big vending machine. There's one right by me, and I can actually see it from Interstate. And let's see, Carvana. Their stock. Um, this one is one that fluctuates quite a bit. Now, when they first went, they've been public since like 2017. They had a huge run up. They were almost like a meme stock. They went from the start of the pandemic to start of the pandemic to July 19th, 2021. Wow, almost 1,000%. If you all can see this here on the phone, that's like 1,000% gain from March 16th, 2020. But and then March 16th to basically July 2021. But then it fell down from there, and it's basically in the single digits now. But I think they had a little bit. Actually, yeah, January 26th, they had a big run up because it looked like the market was recovering. That first month of this year, it really looked like the market was recovering. But yeah, I mean, since then, we'll see what happens with all this banking fallout and whatnot. Hopefully, like I say, I would say within the next, how far are we out from the election? Um, November 2024. So we're still like, I mean, less than 2 years, obviously. Let's see, December, January, February, March. So we're like 20 months out. And we have the primaries and stuff starting this year. But, we'll either be printing more money or more ballots. I'm just kidding on that one. Or am I? But yeah, I mean, well, we're always printing money, here in the United States. But yeah, I mean, like I said, I think 2024 will definitely be a really good year for the market. So I mean, that's definitely for leap options and things like that. Definitely a solid time to consider that. So anyway, any other comments about anything? Teslas, other cars? I had a feeling you were going to agree on that one. Yeah, I try not to get too much into that because you know how that goes on platforms like these. But they are starting to reverse course a bit. But yeah, it's a bummer, because you really need to be able to trust those processes, and you would think that I mean, like I say, it's a real bummer. Look where we are now. We didn't have inflation. I mean, we had the pandemic in 2020, but we didn't have inflation like we do now. And that's just a real bummer. And people are like sheep. They just walk around. They're like, oh, inflation. Oh, the Fed chairman, he's got to raise interest rates to fix inflation. No, what about doing something with energy? It's like, the answer can be right in front of you, but it still eludes people at the same time. So it's a bummer, but it's like, those of us that do the right thing and invest right and stuff like that, we're still kind of ruled by the majority, if you want to call it that. But yeah, so I'll give another few seconds here for any other comments or questions or observations or whatnot. Been a great session. Never thought I'd end up going this long. Actually, went into the next day here on the East Coast. But yeah, really enjoyable. If I could get this amount of live following, I would definitely do this more often. So, oh, I had another comment that showed up here that I missed. My aunt has a 1992 Honda Accord she bought new. Yeah, I see a lot of those on the road. Actually, the ones with like the spoilers on the back that a lot of the I don't want to say that, but just I see these like 92 Hondas with spoilers on the back, and it's so funny because it's like it's not a race car, but they put like these loud mufflers and stuff on them, and it's kind of I've never understood the logic in it, if there is any, but I find that funny. But I promise you, I won't put a spoiler on my Accord, and mine is 2014. So if I have it that long, I won't put a spoiler on it. Anyway, thank you all again. Great session. Take care. Have a great weekend. Hopefully I'll be back in a day or so. Thanks again.